Hey, everybody. Welcome. Thank you very much for joining. My name is Matthew. All the hype these days in finance is about the CBDC. Today, we're going to look at the CBPC for Denmark, Norway, and Sweden. CBPC, what is it? Central bank physical currency. Very old technology, in fact. 1,000-year old plus technology. In the 600s, 700s in China, it was invented by merchants, monopolized by Kublai Khan about 500 years later in his joint Mongol-Chinese dynasty. He was the first state backer of physical money. And through the centuries, more and more financialization was built upon it. But nonetheless, it should be clear that the transport and the payment mechanism of paper is much more fungible, much less dangerous, much more secure in many cases than using even precious metals like gold and silver as a payment and or transport mechanism. So that is why it began in the market. And of course, that is why it was taken over by the state. We have central banks in every country in the world today, or some monetary authority. Three interesting ones we're going to look at today are, as I mentioned, Denmark, Norway, and Sweden. Why? Well, in Norway and Sweden in particular, for about the last 15 years, they have been on a very, very strong campaign of anti-cash, an anti-cash economy. That doesn't have necessarily anything to do with a central bank currency, or at least it didn't at the time, 15 years ago. It just meant using credit cards, debit cards, bank cards, mobile payments when they came along, not using dirty physical cash. And let's go ahead and just see how that worked out for them. Okay, so here the first one on the list is Denmark. Now, Denmark's a little bit different than Norway and Sweden, because Denmark, for political reasons, chose to peg their currency to the euro in the start of the 2000s, but they wanted to keep their currency all the same. So they didn't want to fully go onto the euro, but they did want to peg their currency to the euro. So like the euro, and like, in fact, most nations of the world, the physical currency stock of Denmark increases. Okay? But let's go now to Norway and Sweden. They're a bit different here. And let's look at how these famous cashless economies have grown their central bank physical currency. And one more thing to point out here. I'm going to start putting on more items. On the left-hand side, you see money supply in kroner, billion. I am actually using each native unit. Okay, so this is Danish kroner. I'm going to put on Norway right now. This is Norwegian kroner. Swedish krona, I believe it's krona in Sweden. Apologies if I get this wrong. I'm not an expert here. But that will come next. And these are all in native billions. So they just kind of all fit on the same chart. But these definitely do have different values, different USD exchange rates relatively. So keep that in mind. So here we go, Norway. I got data here all the way back until 1969. Of course, Denmark's data is even further back still. I just need to get it plugged in. But if we look at Norway, they started with about 6.6 billion Norwegian kroners worth of currency at the start of this series in 1970. All right. And we can indeed, interestingly, see here, right around the GFC, right around 2008, 2009, it starts to level out. It starts to get flat at about 50 billion Norwegian kroner. Okay. And from 2016, it even falls. All right. So where today we have 75 Danish kroner outstanding, but we only have 39 billion Norwegian kroner outstanding. And again, these are different values. They're not the same. This is Danish kroner and Norwegian kroner. I'm just showing it to show the relative rates of growth. We don't even have to look at percentages. That's it. Okay, so again, like the euro, the Danish kroner has continued to rise, but unlike the euro and unlike the Danish kroner, the Norwegian kroner and the Swedish krona are not pegged to the euro, and they are free floating, and it is policy to try to have a cashless society. So these are physical currency stocks. This is the cash. This is cash money. This is CBPC. You can see that it is down, let's say 39 billion from its height, 50 billion. It's down over 20% in the last 5-6 years or so. And if you wanted to go back to the levels of where it is now, 39 billion, you'd have to go back to 1996. Okay, so it is true that certainly if you look at money printing around the world, as I do, we're starting to see anomalies here. Okay, these are exceptions to the rule. This is a very important point. Euros, dollars, even Chinese yuan, they're famous with a CBDC pilot project. They haven't launched it. They have a pilot project. They are printing physical cash as well, like mad. So it's just not true that physical cash declines. But the Scandic countries are trying. Okay, so Norway is trying. Now let's look at Sweden. Again, this is native Swedish krona now, okay, in billions. Don't have the nice seasonality here in the 60s, end of 60s and in the 70s. But you can see here from the 80s, as with every currency on this chart, you see this beautiful peaking every December, end of the year. Why is that? That's just the seasonality of cash. This is a phenomenon that actually goes back to ancient times. After the harvest, late fall, winter, solstice, that's when the demand for cash is the highest. People want to get paid after the harvest, and they want to spend on their families during Christmas. You do see a little bit of a bump in summer, spring, end of spring, summer with the planting season, but the biggest bump is at the end of the year. And that's a phenomenon which does continue today in most countries, even if you're not an agricultural country anymore. So you can already see what's happening with Sweden. What happens there? Nominally, they're a much bigger stock than both Norway or Denmark. Also a bigger economy, $600 billion economy for Sweden, $500 billion for Norway, $400 billion for Denmark. I don't have those numbers off the top of my head. I just did that research just before this video. So 4, 5, 6, 100 billion each for each of the 3 Scandic countries. Sweden, of course, is the biggest. And Sweden, you see here, tops its physical stock, its physical currency supply here in around the GFC. Again, like I said, about 15 years ago, this push to end cash really started. 108 billion Swedish krona at the GFC. 108 billion Swedish krona. Okay, these are all in their own native kroners. Okay, and then we see Sweden really made a drive here to go cashless. We see that 108 billion at the GFC. You reach a nadir somewhere in end of 2017, almost a 50% drop. Almost a 50% drop in the currency, and then it actually has trended up since 2017, 2018. The seasonality is kind of wacky. You can see here in Sweden's case, still people are going to demand cash during, the holidays. But you can see that the money supply is much more controlled and a little bit wacky. But it is up. And of course, as most countries did after COVID, they printed a lot as well. And so it's up. It's up a little bit. 65 billion Swedish krona as of end of last year. And that is up from 55 billion in end of 2017, but still way down from the peak of about 110 billion Swedish krona in 2008. Okay. So this is interesting. I can tell you that with all of my research, these countries are kind of an anomaly, particularly Norway and Sweden. Denmark, again, pegged to the euro, we can see that they still do increase the physical currency supply. That's understandable. Sweden and Norway, free floating, they really are trying to do this push for a cashless society. And I do think, this is my opinion, but I do think that they will probably be the leaders in experimenting with, on a sort of moderate to decent size economy, piloting in a CBDC into the modern world. That's my opinion. China, of course, famously is doing a lot of research here. They've tested it, they've piloted it, but they still haven't officially launched it. It's only been launched in Nigeria and in a few Caribbean nations, the Bahamas, Jamaica, so on and so forth, and in very, very small amounts. But these are relatively large economies, relatively wealthy economies, they have the wherewithal, they have the will, I think, the political will to try to do this. And though I personally think, of course, that CBDCs are an Orwellian hellscape, we need to track this, we need to understand it, and we need to follow what's happening. Because I personally do think these are the countries that are going to try to lead the way, particularly Norway and Sweden. You can see that for the past 15 years, they haven't taken it to zero, which is also interesting. Okay, cash is still a very important technology, a very important tool, particularly for low-income people. And of course, that's the excuse that's usually used, low-income, immigration, why cash can't completely be obliterated. But I think they would like to if they could. And, if they could give everybody a smartphone, if the government could say, well, banks don't give some banking services to some of our citizens. Everybody needs a smartphone. Everybody needs to be identified with our CBDC, and we need to look at everybody's CBDC transaction. I think a rich, kind of confused capitalist/socialist country or countries such as Norway and Sweden might lead the way there. I'm really not intending, I have a lot of respect for these people. Obviously, I have family history there as well in Norway. But I think that if you're going to follow a few countries that really are going to try to do this, it just makes sense that it's going to be these moderate-sized economies. So that's really the point of this video. Let's quickly show these in dollar terms just to see if there's anything interesting here. At the risk of cluttering this chart, let's take off Norway and Sweden. Let's just look at Denmark here. Okay, so now we're on the right-hand side, dollars. All right. Of course, the dollar, it's just the best-looking horse in the glue factory. It's not anything necessarily special. It is the world's reserve currency over the last 100 years, but this is relatively standard, and this is actually relatively looking at the euro's exchange rate again, because remember, the Danish kroner is pegged to the euro from here in the start of the 2000s. And we can see that it actually tracks the growth of the native supply in dark green, solid, with the dotted dollar-based supply is relatively close. Okay, definitely. Now, let's keep this in the perspective of Denmark. Okay, so when the dollar value is higher, that means the Danish kroner is buying more. When the dollar value is lower, the Danish kroner is buying less, i.e. devaluing. So it was getting a bit stronger here around the GFC. And now it's relatively similar. The path is similar. You can see the path of growth. So that's kind of interesting. Let's look at Norway now. Let's take off Denmark. Okay, so here we go with Norway. Again, the native Norwegian kroner on the left-hand side, and then the dotted red line on the right-hand axis is the dollar value. So at the peak here in 2007, 55 billion kroners to $10 billion. That's roughly 5.5 Norwegian kroners. But then you can see the gap widens. Okay, so that means the Norwegian kroner is getting worse relative to the dollar. You can just see that. That's just how it works. So now you can see it's closer to 10. It was, it would only take 5 Norwegian kroners to get $1 back here in the GFC. Now it takes 10. Okay, and that's actually a similar path for Sweden, isn't it? I think most people probably know that live in the area. So let's go ahead and put Sweden on. There's the native Swedish kronas, and here's in dollars. Let's take Norway off just to keep it clean. Again, roughly tracks. They both grow, right? But the dollar is stronger when it's lower. Okay, so it's taking more Swedish kronas to buy the same amount of dollars. And actually, the best case was when it kind of recovered here just before the GFC. The Swedish krona was again relatively strong. This is 108 billion Swedish kronas divided by $17 billion, 6.3, 6.5, right? Kind of similar to what Norway saw around the GFC. And then now the multiple is back to about 10. The exchange rate is 10. So it now takes 10 Swedish kronas to buy $1, i.e. the dollar has gotten stronger in the last 15 years. Of course, there's plenty of geopolitical, economic factors for that. This is just a chart. It's just of interest. It's just to show you the relative values here of these currency stocks. I'm not trying to say anything more than that, but yeah, it is interesting. Let's go ahead and put, let's conclude with the native and not the dollar-based stuff. So again, each native kroner or krona in billions is here. This is something to watch out for. Okay, I personally think that this is something to watch out for. These people have the wherewithal, they have the will, whether they're right or wrong or however this works. I think that these are the countries that are probably more poised to make this launch. Of course, you can be a massive communist juggernaut like China and launch a CBDC, and they will. But I think these countries, particularly Norway and Sweden, are going to be the ones to look out for. I guess I will conclude then by plugging the project that I'm working on with the Human Rights Foundation. We have a great team over there. We're working on a CBDC tracker. Definitely let us know if you have any comments about that in the show notes, and please stay tuned for more. So hope you enjoyed that. Thanks a lot for watching. I guess just very, very final concluding thoughts. Again, CBDC is all the hype, but pay attention to CBPC because these are the anomalies. Countries with falling central bank physical currency supplies are relatively rare. Typically, central bank physical currency is growing very, very fast around the world still, and a CBDC has to compete with that. So there are a lot of cross currents here, a lot of different vectors, a lot of different things to pay attention to. I will follow it best I can, and I hope this helped. Thanks a lot.